Welcome back, folks. A lot of you are confused on how to enter with lower time frames. So in this video, I want to provide a few examples of how to enter using a lower time frame. And we are looking at a chart of gold on a 15-minute chart, and this is on the New York session, 29th of August, 2024. There was a news announcement on this date at 8:30. Okay, so that starts. Let's just mark that out. Where's the news? The news basically is all this move down. Okay, now before we have that move down, we have these two up candles, which have taken out all this liquidity and come into a fair value gap, okay, on a 15-minute chart. And we can see this here, this consolidation is just time distortion. You can just ignore that. But when the news announcement comes out, or even prior to that, we have this is the news announcement here at 8:30. We have this dump, okay. I see this as a dump for the pump, okay. Now, how can we have traded this move down? What's the entry on this 15-minute chart if you wanted to trade this move down? Well, you've got your bearish order blocks here. These two up candles are your bearish order block. Okay, ignore this consolidation. That's just time distortion. And we have a move down with this displacement. We have nice candles going down with fair value gap that take out liquidity. Okay, and then the news announcement comes back up into this fair value gap as well as this bearish order block. Okay, and then straight down to the low of the day. Okay, that's basically your manipulation. So that's not really the trade. Okay, that is the dump for the pump. Although there is a setup here, and those who want to get in on the news announcement can certainly trade that. That's a valid setup. Okay, and you can see that the news spikes up into this fair value gap, into this bearish order block, making that a nice entry, and down to the low of the day. So you've got to have your levels marked. Okay, and it just taps into the low with 1 pip, and then we get that reversal. So how can we actually trade the real move? That's the pump after the dump at the right time, which is in that 9 a.m. or 9:30 a.m. or 10 a.m. They're my key times for trading gold. Okay, so we're down here at the low of the day. Okay, and it's 9 a.m. So I'm going to jump down to a 1-minute chart. I'm going to show you how we could have, well, what's the entry on a 1-minute chart? Okay, and then I'll also show you the entry setup on a 5-minute chart, which is a little bit easier to identify. Okay, so on a 1-minute chart, let me just go down to that level. So here's your dump. Okay, this is the news announcement, and you're coming down. Let me make this bigger, and you've taken out the low of the day, which you should already have marked on the chart. Always mark out the low of the day, high of the day, low of the week, high of the week. Okay, because they are going to be levels that the market, the algorithm is going to be drawn to. That's the liquidity. Okay, they're going to be the most highest probability trades. Okay, so these two down candles, okay, on this 1-minute chart, take out all the liquidity. Okay, and they are the two down candles take out low of the day. Even though it's 1 pip, that's fine. Okay, sure, it's a shallow run, and therefore we will come back down to this level at some point. But the key here is when we've taken that liquidity, then you're watching the market. These two down candles become your order block. Okay, this is in that last 15 minutes of this particular hour. So you can see here, we start to trade up and we go above, right? We go above these two down candles, we get above the high. ICT says it's simply the open of the lowest of these two down candles, which is right there. Okay, so this candle essentially is the change in state of delivery. Okay, as soon as this candle trades above the open of that down candle, then that is the change in state of delivery. Okay, that's what ICT says is basically the way that the algorithm works. I like to see it trade above the high of the two down candles, so that's my personal choice. But ICT rules are once you've taken liquidity and you have identified those to be the two down candles that are your bullish order blocks, then the algorithm will start to reprice higher as soon as we start to trade above the high of that, the open of that down candle, which is what we do here. We don't need to close. As soon as we tick even 1 tick above that open, then that initiates a change in state of delivery. And so therefore we're now in a buy model. Okay. Now, for me, I like to see go above this and then any retracement into that order block. So that's your order block there, and that's your trigger to go along and expect repricing higher on this 1-minute time frame. Okay. So that's how I look for entry on a 1-minute time frame once high time frame has given me an indication. So here, high time frame coming to a daily low, okay, at the right time in that new hour, okay. Now, you might not see that, okay, because that does take some training of your eye and reviewing your charts and studying the charts and watching them live and understanding what this is going on, okay. But certainly you can see that you've got displacement here, and therefore any move down, right, any move down into an order block is going to be another entry opportunity to go long in this market. If you don't see that, you can certainly see this one. Okay, where it's still moving up and giving you another opportunity into this fair value gap, into these two down candles, which are your bullish order block. And you can connect these two down candles to this original order block. Okay, so if I drew a line from the high of there, they will connect. Okay, and so you can take an entry from that bullish order block or this one as it comes down to this bullish order block. So lots of opportunities, and your target's going to be back to equal highs. Okay, there were some, so there's equal highs there. Okay, so you can see that's where your target should be on that entry, and that's a very decent trade with very low risk. Okay, easy to manage, easy to identify. Okay, so if we measure the entry, which is, let's say we measured it from this push down, okay, into that order block, which is the original order block, then that's a nice decent, more than 170 pips. Okay, I mean, could you have grabbed 50, 60, 70 pips from there? Absolutely. You could also have just taken a exit when you're back above this dump. This is the dump, okay, back up. You can see that is also a reasonable target. Probably the easy target, okay, is just back up to that dump. Again, that's a nice, easily 50, 60, 70 pips from that. Okay, so that's all I want to show in this video, an example of how to enter using lower timeframes. I hope the video is useful. You've got to go back now and study these charts, go and find this on your own chart, 29th of August 2024, the New York session, and look at this on a 15-minute chart, on a 1-minute chart. Let me show you the easy setup on the 5-minute chart. Okay, the easy setup on a 5-minute chart is, okay, let's actually go to the right time frame. So let's have a look. There we go. So this is very straightforward 3-bar entry pattern. Okay, at the low of the day, we've taken the low of the day by 1 pip. Okay, down candle, middle candle, wicks into the liquidity, third candle engulfs. Okay, that's the entry there, or you can wait for a pullback into that area there, but you're not going to know exactly when that pullback's going to end. But that is the setup 3-bar pattern on a 5-minute chart, straightforward. That's all happening just before the start of the new hour. Okay, you can wait for the new hour to start. Okay, but that's your setup on a 5-minute chart. Again, you can target where this dump started or equal highs above. Okay, so I hope the video is useful. Study the charts. I will now talk with you in a future video.